Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I am your host, Dr. Michael LoPiano. Wonderful to see you all once again. Here we go into a Tuesday. You know, stock going down on a Tuesday. That was hopefully not though, right? I mean, that'd be tight if it didn't. But yeah, title of today's article newsletter over on Twitter is 580 points the way. So, right, I mean, a lot of what we're going to talk about today is, I mean, not a lot, but basically what seems to me to be our most operative kind of price determinant at this point in what we're looking at is really what's going on in the broader market. We talked this weekend, we talked last week, basically at how our broader momentum indicators on the broader market, on crypto, on equities are really moving bearish. We're looking at a deeper correction in the market. And that this squares up pretty well with what Doge is doing. So, what the Trump administration, what Elon Musk, right? What all is going on here, right? While we see these, right, and we spoke about this weekend, right? The last time that we had kind of these government audits. So Reagan did a government audit basically in 81, 82. And Clinton, right? Clinton did a government audit in 93, 94. And both of these resulted, in temporary market. Well, Reagan's was a lot steeper because also Reagan had to fight the inflation problem, which more or less, right? Because the CPI data is a lie that we see on a regular basis, right? The Fed's going to come out and say, yeah, CPI 2.9%. No, it's not. No, it's not. That's a lie. That has not been the case basically for any of the past 30 years. Definitely check out Shadow Stats on this. But without going on a full inflation CPI is a lie digression, which I've been known to do, we'll talk about some of our GameStop data, what we're looking at heading into this week, and basically why all of this is correlated with what we're seeing in the market. Also, some additional things that I suppose we are seeing and why I think this 580 price level right now, based on what I'm seeing in our options data, is likely going to determine what will go on today with GameStop's price, barring, I don't know, some kind of FTD closure, something like that. So we'll hop right into it. Before we do, we always have our gratitude. Moment of gratitude, right? Once again, for Steve Sala for sponsoring today's video and newsletter. And to our monthly contributors, Dat Screfto and Ken Wedmerland, who generously helped me out offsetting some of my data expenses, right? I subscribe to a number of premium data sites in order to be able to produce my content here. So they've been kind enough, as well as many, many others, to contribute to my ongoing attempts to try to make sense out of what's going on with GameStop, try to do my best, give my best effort, put my best foot forward without having to monetize my content, without having to put any paywalls up or anything like that. So everything that they've offered, everything that everyone has offered so far has purely been out of personal generosity. So I'm very thankful for that. So first off, though, a little bit of fun, right? We'll start off today's video with a little bit of fun, and that is our mystery 69-cent trader. So this is now, right? We now have the 7th. I started tracking these. A number of other people have been tracking these, but very interesting, right? Right at the beginning of the exto period last night, the extended hours overnight period, exto, we got our 7th single share order that was filled. That it was filled right when the overnight market opened, and filled with a cent denominator of 69 cents. So we've had 35.69. I think we've seen 28.69. We've had 27.69. We've had 26.69. We've had 24.69, and now we've had like 225.69. So on February 25th, we had a 25.69, and now yesterday, right? There it is. There's 25.69. And it seemingly always heads up, right? It always seems to connect within a few pennies of some sort of technical level as well. So what's really doing this? Who's doing this? Now, this is no novice that's doing this. This is somebody who at least knows how to code, Ultimator 5 noticed that this specific trade ends up executing every time. This single share executes every time because of a failure on the part of the overnight extended hours market maker to load the order book in time to properly get this going. So this trader has created a script to execute this order, to send out this order immediately when the overnight market opens, in such a way that it gets in time, right? That before the market maker can load the order book, and so it gets filled. Now, what exactly is going on here? Obviously, this individual is not making very much money. They're making a couple dollars with these trades. Why is this being done? What's going on here? Why do all the orders end in 69? Some questions about this. Is it Roaring Kitty? It very well may be. I wouldn't put it past Roaring Kitty to be able to figure out something like this. But is this some kind of signaling? Is this sending some sort of message? Is this some sort of crack in the matrix? This is the 7th one of these we've gotten. The first of them being actually, it marked our top. It marked our top. It shot up actually to the top of our bullish regression channel way back on, I guess it was January 6th. I want to say January 6th. So somebody who is marking this, what's going on? I said earlier, it looked to me like whoever this person is, they may be pointing out key levels potentially in our technical analysis, or it may just be this trader is attempting to signal reversals of some kind. So when we got this order last time, GameStop had done this movement. It had moved down sub 24 at some point. It had moved down below $24 and reversed intraday. And then we got this after hours. And then, of course, for the next 2 days, GameStop traded up, and we got this very strange movement. I guess this would have been pre-market on the 27th, I suppose, the 27th of February. We opened up, the price shot up, I think, to 26.20 as a shortly, right, 2 days after this. So it's somewhat marked something of a bullish recovery after trading down pretty sharply for the whole day, as we did yesterday. Could this trader be attempting to communicate information about why he thinks that we will be, signal, hey, we're going to move to the upside or something like that? Could this share order be something that actually messes with the pricing algorithms of the stock in question? I don't know. It can be fun to speculate sometimes, as I just did doing that now. But definitely worth keeping in mind, right? Somebody refuses to let the meme die, right? Somebody, whoever this is, refuses to allow themselves, to allow anybody looking at the charts to take this dip seriously without noticing 69 cents. So very interesting. Very interesting. So what are we looking at today, and what did we see yesterday, right? As I mentioned at the beginning of the video, what really looks to be moving our price action, or what really looks to be the more of the key determinants on our price action in GameStop is what's going on in the broader market. And we are looking at this bearish correction. I would not be surprised based on what I've seen in our momentum indicators. We've talked through this a bit. We'll probably have another time to talk about it again. I can refresh our technicals after about a week. Momentum is moving to the downside on equities. Momentum is moving to the downside on crypto. And even this Trump announcement of a strategic Bitcoin reserve very momentarily reversed it. But then, we just went right back to where our deeper momentum indicators were. So however these pricing algorithms work, I think they do indeed take into account some of these deeper momentum indicators, deeper moving averages. And perhaps they work differently. This is very interesting. Perhaps they work differently during the extended hours trading period. So after hours, pre-market, and overnight. But when things, actually, Ultimator pointed this out too. Notice this on silver. Silver has a tendency to trade up when the market is closed, but then reverse its gains when the market opens. Very interestingly. So something occurs when the market is open. Differing calculations maybe go into play. And it seems to be that this announcement with respect to, Trump and the Bitcoiners are really, I think Bitcoin picked up like $12,000 or something, basically at that announcement, but then instantly gave a very sizable portion of that back yesterday, while SPY went all the way down, right, all the way down to this, just a little bit below this 580 level, and then bounced back to the upside into the close. Now, what was that yesterday? Why 579 and then bounced back up into the close? That looks to be what SpotGamma describes as a put wall. Now, if you have a high concentration of puts, they can offer something of, they can imply something of a cushion as that level is approached, as that level is reached. It has something to do with IV. I think it has something to do with the Vanna effect there. I actually have to map that out and figure out exactly how SpotGamma is determining how those put walls work. But basically, their standpoint with looking at very heavy put positions is that a standout put gamma position, net put gex, right? Not just open interest, but net put gex, meaning there's an assumption that it's trader long puts, which is an easy assumption on SPY. That this can cause these kind of intraday scrubs or bounce effects after you see a large amount of realized volatility. So that's what we saw, right? The 590 level failed. We had kind of a little brief rally, and then it just shot right down as that volatility that was up there was allowed to realize, and it moved straight down through the 585 level and then right down to 580, hit the put wall, again, very large put gex position, and then bounced right back up. We do see it trading down here. Actually, I posted this image a little bit earlier in the pre-market period. We did very briefly dip below 580, but it does look like we've come up back above that. Yeah, trading at 581 now into the open. So basically, if we can hold, if SPY holds that put wall position, it does look like a first attempt maybe to scare or subvert that position looks to have been foiled in the pre-market today. Thus far, it doesn't mean we won't get one heading into the day, but traders may take that as something of a double test of the put wall and then reverse us back up. So, right, the thing about put gex is high put gex accumulation to the downside obviously causes volatility to spike and the price to get very slippery to the downside, right? So basically what's happening there is market makers are selling in sympathy with in order to hedge their short put position. So trader long puts has negative gamma on trader books. Trader long puts has positive gamma, positive delta on dealer books. So as that delta is decreasing, that positive delta is decreasing as the price goes down, dealers are selling shares as the price moves down. So that puts actually extra sell pressure on the actual price during the day as the price moves down. So they sell with it. Now, I think the put wall effect tends to be the fact that as that happens, you do get a little IV bump up. So the Vanna effect, right? So as IV goes up, you get a slight appreciation. You get appreciations in delta. So as, of course, SPY moves down, you have delta actually move up as IV moves up. So if you have a very large put position, a standout trader long put position, meaning dealer short put position, as that strike is approached, as it is about to go in the money, right, IV will spike accordingly. But as IV spikes, as the Vega value of those contracts go up, it will affect the delta value of those contracts. And so then you will have a bit of the delta. So the delta will appreciate through the Vanna effect, and it will counteract some of the sympathetic gamma hedging that the dealer is engaging in as the price moves down. So that, as I understand it in my model of how this works, that's why put walls work the way they work. Now, they're not super stable positions. If they get a little bit more force, you can just move right through there. And typically, what you don't want to see, I suppose, if you're looking for a reversal, you want to see a bounce like this. What you don't want to see is a scrub. So bounces come down, boom, V-shape, goes back up. Traders take that and then walk it up because they have a bunch of volatility to the upside that then they can go, oh, it's easy to walk the stock back up, right? Traders or dealers are selling sympathetic down and then they're buying sympathetic up as the price goes back the other way when it comes to put gamma dominant positions. So they're looking at that, right? You want to see something like what we saw yesterday, and two, right? If you're checking out the chart now, pre-market, what we're seeing there, hopefully that continues, right? That will bode well for GameStop's price. Fingers crossed, right? What you don't want to see is a scrub. So come down and then it hits it, and then it kind of goes up a little bit, right? And day traders will kind of do that, but then it doesn't have continued legs back to the upside. So momentum traders are not trying to take that back to the upside. They're not confident about taking that seriously back up, so they don't. And so it goes up and then they go, oh, we're not going, and they sell down and then hits the put wall again and they go, oh, we're not going to do it, right? And so then you get ba-boom, 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 and you get a wiggle, 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 scrub it. So you just kind of scrub on top of that level, and then it kind of dips a little bit below, and then it comes back up, and then So something like this, right? Something like what we saw here earlier around that 590 level. So right, you don't like the scrub. You don't like to see the scrub. Scrub says don't have confidence in a reversal to the upside. But a bounce like this, yes, it does. So that was good. That was good to see in terms of, I guess, bullishness in the short term, right? Seeing something of a recovery. Like I said, we're not really looking too bullish out through March. March is not projecting to be a bullish month. There's a lot of put gamma, especially around March OPEX. So maybe we get a little reprieve after that, after it's taken off the board, just like we did once the February 28th gamma got taken off, all that put gamma. But the month as a whole is not projecting super well, but, for a few days, right? So not seeing a continued pain, continued moving the market down to 560, 550, 540, right? Whatever it is. However deep we go in such a short period of time, right? Hitchbacks are kind of normal in these conditions, although they don't make it, kind of all the way back after a subsequent dip. But they can be pretty big, just like we saw, right? They can be $10 of price action, right? It can be a pretty big space over in SPY. So, okay, why is this important? Well, if the 580 put wall can hold, then I suspect traders will then close some of their shorter dated puts and then attempt to ride those put closings back to the upside by buying calls, build up a little bit momentum, send it back up, maybe back to the 590 area. If we see that, I wouldn't be surprised to see a bit of a recovery, in GameStop as well, given that some of this is caused by ETF outflows, by ETFs, by ETF shorting, with sympathy in relation to the broader market. Now, if we hop down to what we're looking at in GameStop, you can see this is not looking exactly right. We're not really looking like what we saw up here in SPY. We don't even really have the same kind of key moments. It doesn't have exactly the same pattern, right? We're not looking at the same move down. Well, we moved down the way SPY moved down, but not how it moved down, something like that. So what this said to me, I think maybe this was not largely correlated with the SPY move down. Maybe some of it was, but in general, our volume was very low. Options volume pretty low. Options premium spent was pretty low. Not as low as not 52-week lows, but on the lower, pretty close to the lower side. But what I did notice is in our shares available to borrow shuffle, we did overnight get down to 2.4 million, and we've only recovered up to 2.7 million. Actually, let me take a look at that now, see if any more have become available. I don't think that's going to be the case. Actually, I was wrong. They popped all the way back up to 3 million. So I don't know what's going on there. XRT is still on reg show. I saw this and I said, oh, that's a bit lower than what we've seen overnight. So that kind of stuck out to me as possibly we got something like 300,000 shares in shorting. Maybe dumped on the tape yesterday, something like that. I didn't take a too close of a look at our volume data. Yeah, actually, it's kind of weird, I would say. Not something I'm used to seeing, right? Usually we see at the end of these big dark runs, we see volume candles, right? So we see pretty big volume candles on the tail end of it. I guess the third one. So the third one later in the day, we did see that, but not the two earlier ones. So I don't know. I looked at this and it stood out to me. It said, well, okay, we dipped kind of down there for more settlement purposes, but they seem to have refilled this back up to 3 million. So maybe there weren't that many that were utilized. Hard to say. But in any case, we did move down, and it does look like potentially some other means in order to engineer GameStop's price were tapped into, if not altogether too aggressively, not in a way that corresponded, say, with what would be expected from broader market sympathy ETF selling off with respect to that dip in the market there. Technical wise, I mean, amid our engineering, hard to say exactly what our technicals project there. Have not been super helpful in terms of a forward predictor. I would say that, yeah, we're kind of reaching these intra-week lows in this section after our last episode of price engineering, right? We go, so right on our charts, we can see we go through kind of episode of price engineering, and then we have either a bullish or a range bound period where the price doesn't move down. Right, it kind of goes up and down, but it stays pretty range bound, or it stays kind of bullish, right? We've had these segments, and then it gets transposed down, right? It's not like, well, there's kind of gradual selling, it gradually sells. No, there's a targeted moment where it gets transposed down, and then it just trades sideways, and then it gets transposed down, and then it just trades sideways. So we had our downward transposition, which established, I guess, a low of about 2380. We dipped a few pennies below that pre-market today, but we look to have recovered a little bit. Not a ton. Yeah, not a ton. Oh, wow. No, we actually went down to 23.55. So that's within about 20 cents, I would say, of yeah, that's within about 20 cents of one of our weekly moving averages if we scroll down a bit. So weekly moving average all the way here. What is that? 23.35. So yeah, within 20 cents of this 50-week moving average. Again, at this point, like you kind of have to have an exploratory mentality with it. It's like, well, what can these guys really pull off here? How does this really work? How does this really make sense? Do technicals, have they just decided that in this phase, they just don't matter? Couldn't tell you. Not sure. But, if they do matter, if they, unless we get some kind of price engineering to leg us down again, which they could do, there's no reason they can't do it. I don't really know the constraints on this, but they seem pretty determined to make sure that the price does not recover outside of these bounds. Though how exactly this is occurring, I'm not altogether too sure. Right, GME's volume slams up as we go up. Right, total shares traded go way up as we move up, but then on the way down, not so much. Right, when we move into bearish periods, it goes down. It doesn't equalize these moves down. But okay, so that's what we're looking at there in terms of technicals. Momentum, not looking great. I'll say that it's not looking great. But we could, I guess, bounce back up to the upside in terms of in terms of some of our shorter term momentum indicators, right? It's based on weekly closes. If we move back up to say 25 or 25 something, then that seems quite possible. But yeah, just waiting, seeing what it does. In terms of our options, predictable stuff, mix of bought and sold, right? Trades at the bid, trades at the ask, a lot of call gamma concentration everywhere above us, right? It's like every week comes out and everybody's betting on recovery, and then somehow it doesn't happen. So we did have some put gamma inserted at $23.5 and $24. It did skew toward trades at the bid. So this suggests that it's not perhaps as bearish as it would suggest. The accumulation of OI here, which again is light, right? Not very many puts, and they're clustered between 23 and 25, and that's pretty much it. Like we don't even have that many kind of going forward. We do, I guess, for March OPEX. We have about 20,000 puts out for March OPEX, but yeah. So max pain still at 25, going out through all of March, 25, 25, 25, 25. And then, April 4th, we don't have too much OI there, but it's at 27. April 11th, really not much at all, 26. April 17th, April OPEX, it's at 24. So status quo. I mean, it's not terribly exciting stuff to look at. I guess, our options market does not suggest crazy continued downside weakness. We're not seeing that in terms of GameStop's volume, but yeah, the weakness is kind of there, I guess, in some of the momentum. I mean, our deeper momentum indicators still say we're moving to the upside. Our deeper moving averages are still moving to the upside. I would say at this point, to me, right, it looks like GameStop's price is being contained in terms of what we might expect, right, to make sure that, look, right, we have so many calls in this area, and because we already have this IV situation, right, this 4-week IV appreciation situation setting in before earnings, right, we can see it continue to tick up basically from the 10th. Well, the 10th it traded back down, but basically around the 17th, right? We've been slowly ticking up, despite the fact that from here to here, right, IV is higher on GameStop, which is not the case, despite the fact that from 217 to 3.3, the price has lost about $3, right? GameStop's price has lost a significant amount of value, but the IV has gone up. That's not very typical with GameStop. So what I had suggested earlier is that I think options market makers, especially, now I don't know what's going on with swaps. Part of this too may have to do with making sure that the environment is right for marking certain swaps. There are a lot of swaps due in March, especially these purported Bill Huang and Credit Suisse GameStop swaps going back all the way to 2021. They're coming due on their expiry date is the 13th of March. But right, we have so much call gamma in here. It's so concentrated across all of these different strikes that if we really do definitively move up here, like we've teased a few times, this is going to spike IV. It's going to place far more stringent hedging requirements on the options market makers. They're going to have to buy a lot of shares in order to account for those the appreciation in delta via the increase in IV. And so they are likely, I would suspect, trying to keep GameStop's price contained down in this lower area where there just isn't OI, right? They just keep it out of these OI zones and then let it kind of recover toward the end of the week back to max pain to, screw whoever opened puts, right? Because screw people who open puts, I guess. And back to kind of 25. So, if again we see midweek, we're seeing 98, 99% of our call options out of the money, I think it's a high probability that, we will reverse back to the upside to the extent where we see the more customary kind of 90% number, which is a little bit more feasible. But anytime I see that kind of 99+% of the call options are out of the money, that says to me that looks like some price engineering. That looks like some price trapping. That looks like putting the finger on the scales when I see percentages like that. So okay, right? We still have all this call gamma above us. This looks a little bit scarier than maybe it should be because 2350 and 24 have short puts there, but I don't know, pre-market we slid down here. So maybe that's it, right? Maybe we realize the volatility, especially if SPY bounces off that 580 level and starts to move back to the upside. Maybe we do too. But I think there are a lot of moving pieces. There are a lot of concerns potentially behind the scenes that we plebs cannot simply fathom in terms of their magnitude. And so, with a lot of this, the only strategy seems to exercise patience, if not exercise calls. Continuing to wait on Ryan Cohen and company, continuing to hear further news with the company. Maybe we don't get too much in the way of forward guidance, but interesting to see revenue numbers. Maybe we get a revenue catalyst. Maybe we see interesting developments in terms of maybe news or reporting on exactly how the PSA partnership is going. That's something I've been very excited about. I know a lot of people are excited about that. Doesn't look like there's too much crazy to report, but I think, if we are looking strong in the broader market, we see that 580 level hold, which very promising right now. I think things might look up a bit into market open, but hey, never say never. If that 580 level does fold, if it does show weakness, if we do move through that, we kind of get a little scrub-a-dub-dub and then move through. Markets rug pull once again, then I would not be surprised to see institutions continue to try to push GameStop's price down temporarily to afford their swap rolls or whatnot. So hey, so that's going to be it for me today. Good luck out there, everybody. Good luck with your trades. Good luck with watching this party unfold, of course. And we'll see you all. We'll see you all tomorrow before market open once again. So thanks very much. We will. We'll see you then.